Tom. Tom.
This is 30 minutes.
This is the 30-minute, but I'll put up.
Yeah, hi everybody. Yeah, it's Tom Williams here. Thank you very much, Rita. Rita's here on her own today. I think Peter, her husband, is going to show up a little bit later. But she's an extremely useful lady to have around, believe me. Extremely useful. And anyway, now we've got a chart up on the screen. I assume everybody can see it. It's a 30-minute chart of the S&P 500. Sebastian recommended we look at the 15-minute, which we will in a moment. But this is a 30-minute chart. No reason why I've got a 30-minute up, because you could read all the charts in all the different time frames, more or less. Because if the market is weak, then that will be portrayed on all the different time frames, regardless of whether it's 1 minute, 5 minutes, 10 minutes, so on. Okay, so immediately I look at this chart, I can see some serious weakness in the background. Serious weakness. And lo and behold, there it is, look. Markets do not like high volume, which that is, look, as the market tries to go up, because that's them selling into a surge of buying. And that's what causes that. And we know that's true, even in hindsight here. Next bar's down. Right, red down bar. This bar, look here, the following bar is up on no demand. It's a blue bar, it's up, look, the volume is low. Now there's no way the market's going to go up on no demand when you've got this right standing behind you. Or even that. Okay, now the professionals are fully aware of this. They're fully aware. Next bar is level, look. Now that looks, it's a black bar because it's level. The computer colors these level bars black. All right. Okay. Now, okay, we look at that bar, look, and we look at the volume, and it's low, look. So you might say, oh, that's a test. It's not a test because you've got this what we call top tail to it, look. Tests do not have these top tails, right? Okay, so what's happened is the professionals know that you've got this very high volume here, this sign of weakness here, and this increased volume on this up bar, look. Well, low volume, sorry, on the up bar. That'd be no demand. Now, okay, so here they're not interested in going anywhere at the moment. This is a 30-minute chart, so it's only about just over an hour ago. And that is not a test because it's got this top tail. And the market's just there at the moment, look. It's not going very far at the moment. How long's that got to run, Peter? So I've got so many women around.
With the half hour, we've got another 5 minutes. 25 minutes.
Oh, it's quite a long way.
There's a question on that chart.
Let's have it.
That no demand bar, why is that not a test? You're over here. Why is that not a test?
What, this one?
Yes.
Right. Well, it has got a bottom tail. You've got some, no, you see, because the background, you've got some serious weakness behind you, look. There's the high volume, look. right? Up bar. So we definitely know there's weakness there, look. Without question. Up bar, it's thrown up a signal on that. What's the signal say?
Can't see because you've got your magnifier on.
Oh yeah, sorry.
Possible hidden selling.
It says possible hidden selling. Read these dialog boxes. There's a lot of information on all this. And the thing is that these signals that you see will be repeated many, many times in your lifetime. So you recognize it. We tell you that markets don't like ultra high volume or very high volume on these up bars. And I think, look, even the price spread has narrowed somewhat. That adds to the weakness. Then this sudden down bar here, I'm not sure what the computer's calling this.
Supply coming in.
Yeah, supply coming in, okay. Well, that's what I would call a top reversal. Now, don't forget you're dealing here with a computer who's just reading the lines of code that you've got programmer to put in, right? So it's actually running live. And these rules were written many, many years ago, and they're still working. Well, the reason I tell you that is because you can be rest assured that during your lifetime they'll still work, because this is how the market works. Now, why isn't this a test, you say? Well, if that was a real test, first of all, it wouldn't be an up bar like that. It would be a proper test. I can't. Now, this is more like a proper test here, look. See, there's been weakness there, and they just gave the market a quick test look, see what was going on. But notice that the high is not higher than the close of the previous bar, where here it is. So it's not a test. It may look partially like a test, but it's not. And because you've got this weakness right behind you, your decision to interpret that bar is heavily influenced by this. That's why you've got to be a little bit creative and flexible in your thinking. I mean, there's no way, if that was a proper test, right, the high would not be higher than the close of the previous bar. It would be a narrow spread down, probably close in the middle, and the volume will clearly be low, which it is. But because of the weakness of the background, and its up bar, we assume that's no demand. And the following bars support that view. Okay? Now this market has been held up and pushing up for quite some time. And apparently this is due to the Federal Reserve pumping huge sums of money into the market. And I think they give it to the banks, and the banks are told to buy stocks, right, to boost the market. And that's what's going on. But whatever's going on, the professional money will work around that. And they can do that with the power and the size of their trading. Remember, the so-called smart money think nothing of trading 40, 50,000 contracts and more. That's just one trader, one group. I mean, I know there's a group even in 40 miles north of where I live here. And they trade currencies, but they still trade. I know that they've traded 40, 50, 100,000 contracts. So this is why they call them syndicates, because they've got the power of group power there. But that's why you must be influenced by the background. But you'll spot it straight away in time. But that's what a test looks like there. The high is not higher than the close of the previous bar. You can see it's a definite down move. They probed down and closed on the high, and the volume is relatively low, look. And that was done deliberately just to make sure they could have this up move on this massive volume, look.
There's a question on this bar. Shall I speak it?
Yeah.
Yeah, still on this bar here. Yep, the blue one there. Thomas is asking, wouldn't the fact that the blue bar went below the previous indicate that there was a test on a lower time frame?
Well, you could check all that out. I assume that's correct. But it's not a test. And, well, just say it was a test, which it isn't. It's a failed test now, isn't it? Because believe me, professional money are watching this, not taking their eyes off it for 1 second. And if that was a genuine test, then those following bars, look, 1, 2, 3 bars, right, that's a whole hour and a half, are not going to sit there. That market would have shot up. Believe me, the weakness here, these 2 bars here are stopping them. That's supply. Definitely. And now they probed that down. But the fact is, you do have a bottom tail, but your analysis is heavily influenced by these 2 bars here. And there is a few red arrows on the way up, look, which they have been tested, so there's definitely weakness here. And this one's, this black bar, this is a no demand up bar by the look of it. That's not a test either.
People are asking for the 15 minutes, so it's saying there's quite something interesting.
Right, let's have a look. Put it up.
Yeah.
Thank you, Rita.
Well, this is 15 minutes. It's got some information there.
Right, now it's the first time I'm looking for. Thank you for that suggestion. But you see, the weakness is always portrayed on all these time frames. Right, so up it goes. There's a high volume, look. There, this time. It's still there here, look. Now, admittedly, that's a down bar, but the thing is you've got top tail to it, look. And what knocked that bar down, it is a down bar, but this top tail, look, when that was marked up there to that high, that was hit by that volume that you saw on the 30-minute chart. And that's what knocked that down to close the low. That's really definitely a sign of weakness. So all the weakness is always portrayed on all these different time frames. And the computer picks it up.
No result from effort.
No result from effort, which is intriguing. Study those dialog boxes.
Question from Benno. Is that a hidden up thrust?
No, no. Why? What, here?
Yeah, I think that's what I was talking about.
The area we're talking about. Well, how can that be a hidden up thrust? Think. An up thrust is designed to well, wait, hang on. Who said it wasn't an up thrust anyway?
Someone asked Menno says, is that a hidden up thrust?
Well, it's certainly not hidden. Here. Is that what there you mean?
This.
Yeah, the red one.
Yeah.
Well, no, sorry. It looks like an up thrust. It tastes like an up thrust. It smells like an up thrust. But as far as we're concerned, right, admittedly, it is an up thrust. But as far as we're concerned, because we're involved with trying to get it right for people. A true upthrust, right, only occurs immediately after you've seen weakness. Now, we haven't got weakness behind us. We've got an up move, right? And that is supply overcoming demand. They've marked it up with as much enthusiasm as they could, right? Because the market's been going up day after day for some time. This attracts people into the markets, so we're trying to catch the next move. But as they mark it up, the supply is so high that it causes it to close on the low. And it's even got a signal up there, look, which we just read. What was it say?
No result from effort, that's it.
Yeah, that's it. It's quite a good interpretation, actually. Right? It's been a great effort to mark that up, but the effort has failed. That is a sign of weakness. Right? And then you'll see these bars here have to be on low volume.
That one is, yes.
See, so that's no demand. And that's directly the professional money seeing all this, knowing the market's weak, and that's their response to it. I mean, they may here have tried a few tricks to see if they could shake the market out. Right? Now, interesting here, there's no signal on that. Right? So even computers know more than we do. But as soon as it attempted to go up, look, there's a no demand. Yep. There it is, look.
Yes.
There's weakness here, look.
So is that an upthrust, Menno is asking?
No.
He's looking for upthrusts. It's not an upthrust.
You're determined to find an upthrust. Well, there are many upthrusts, aren't they? Yeah. But look, ignore the signals at your peril.
Yeah, upthrust.
I'm always telling Gavin.
No demand.
No demand. Well, that no demand is a direct result of the weakness, because the professional money sitting there, don't worry, they're watching this like hawks. And then when it gets marked up by the market makers, right, it's like the auctioneer in the auction room marking the price up, see if it can get somebody to bid. The professional money know the weakness is there, look, and way back here, and they ignore it. And the end result is up bar and low volume. It's very logical. That's all we tell you is logic. We don't have any mathematical formulas. We don't have any special price pattern, nothing. Because it's supply and demand that drives this. And your skill as a chart reader will kick in, and you'll recognize everything I tell you in your own right. Now, okay. Yes, if you're a trader, you certainly would rather be short than long here, although you do have this here. Don't know why they did this, because that's usually a ploy to shake people out, to try to generate higher prices. That, even that bar there, might possibly allow for a no demand up move, but there's no way no demand up move can shoot up over these areas of weakness here. Any questions? A few requests. Right. See, the reason why we pay particular attention to the S&P 500 is because you need to do all your trading, if possible, in harmony with the main index. And I simply, and Rita doesn't, we don't have time to sit here all day looking for all these individual stocks to buy and sell and one thing or another. You've already done that. Hang on, it should be up. Now what chart's this?
Well, hang on, I'm going back to here. question on here from Carlos. Sorry, some questions coming on this. We're going back to this chart. Would you go short or wait for more confirmation? Says Carlos.
Well, see, all this is, I wasn't trading at the time. I would have shorted that high volume right at the start. And I wouldn't be thinking right now. I'd be in there by now. But it does look weak. But because the market is so devious and cunning, it seems to work automatically against you. And I'm going to have to sit down and think about that seriously sometime and try to explain it. It's because the way the herd, or the 90% of people that lose, are thinking. And if they think they have this feeling that they feel it might go up, then they must be based on something or other. And usually the whole herd thinking very along similar lines. And because the market's there to take money off you, not to help you, then it goes the other way. There must be some explanation. I'm not quite sure how to do that. But, or whether I've got the brains power to do that, I don't know. But there's definitely weakness in this chart, and you'd certainly be better off short than long. But I would have shorted way back here. I'm not saying that just because it's hindsight. I mean, that was screaming out loud, that would be. I actually wasn't watching, I must admit. Now, perhaps even that was an attempt to shake people out, I don't know. It certainly looks as if they were. Is there anything else?
Sorry, that's a 20-minute. We were on the 15. I don't know how I managed to do that, but yeah. Menno, a lower high on lower volume is bearish, question mark. I've been trying to figure out your question, and I think what you're meaning then is this is a no demand. So if you get very high volume at a particular level and the market comes down and it goes up to that level on very low volume, then yes, that's no demand. That is a bearish sign. So I hope I've understood what you said there, Menno. Okay, well, let's now go. What we were doing before was, hang on, I'm looking up Tesla Motors for Park. Hang on. Right. You say it's in the Dow. Let's go to up here then. What is it? And the NASDAQ. Yeah, I looked in the hang on, it's a Dow. Yeah, I can't find it on there. Hang on a minute. TS. Does this look right to you, Park? I find it on here. Yes. So this is Tesla Motors, Tom, and Park says it's risen from about $45 to $90 since March. One indicator is potential buying climax. So do you want less bars or do you want me to put more? Should we have a look at more bar, just the overall. I'll just show Tom the overall picture. Oh, Struth, look at that. Where do you want the trend? Top this bit. Oh, 20 bars. Leave it. Okay, Tom.
But there's a lot of, I see these red arrows that look as if they're on the lows, but notice that those red arrows are followed by testing. And as I tell you, if you see a red arrow, right, appear, and immediately the next bar or two is a clear test. In other words, it's a red bar, down bar on a narrow spread, probably closing in the middle, and the volume is clearly low. They're testing the red arrow. They're testing. That means that thing's going up. I mean, there's almost an example there, look. Well, I have to find them. I've never looked at this chart, although that's an up bar. But I know that's how it works. But anyway, let's go back to the sharp edge end, shall we? That's gapped up. That's a sign of strength when it does that, right? There obviously will be some supply there because the volume's high, and it's suddenly kicked in. Look, high volume. It's closed in the middle. It's gapped up. So that's normally a sign of strength. More of the same thing, right? Up it goes, but notice the volume's falling off. Markets don't fall off like that as it's shooting up like that. And there's the high volume, next bar, look. Now, admittedly, look, it's a red bar, but you've got to be flexible in you've got to understand what's going on there, look. There's a no demand. It's been marked up, look. Next bar, that's why it's got what we call a top tail, look. That massive volume was the volume that's made that weak. However, next bar's down, closes near the high, look. The pressure's off, look. And that's why it went back up, look. So there could still be more upside to this stock. So you wouldn't short it.
Is that a test, Tom?
Well, it's certainly, well, I can't see it very well. Hang on. That's it there, isn't it? Yes. It is a test. Yeah. See, that's testing. Oh, yeah, it's very low, isn't it? That bar there is testing the weakness here and here and even here. And that's why it's gone up next bar, look. It's even gapped up. So there is potential in this stock for more to come in the upside. So you have to be careful and realize that. And you realize that because in the background, you've got this gapped up. And you've got a lot of apparent accumulation in the background. All through here, look. Something's happened here in this stock. What's up? Gapped up. So this stock looks strong. So I'd be careful about shorting that.
So Menno, you're definitely keen on the test. So Menno's saying, so a test bar can be an up bar also? Question mark. Yep. I'm handing over to Tom, but also don't forget, we said, I think last week, there's a very excellent webinar in the archives in 2011. Philip Friston did a webinar about tests. You might want to look that up and study that. So, yeah, Tom.
test by its very nature always has to be on a down bar, right? You can't test something on up bar, right? You can't. It's testing for supply, because a big danger to professional people that are in these contracts, right, is other professionals selling into your attempt to move it up, and that'd be disastrous for them. Remember, there are no friends in the stock market, and they will do that to you. So they test the market. Now, a test is always on a down bar. Now, say you're looking at an hour chart, right? So if you're looking at a 5-minute chart, you see the market fall down, right? Start of the test, it'd be a red bar, right? It closes in the middle, right? You look at the volume and it's low, that is less than the previous 2 bars, right? And it starts to move up because of that test. But if you're looking at our chart, by the time you get around to it, right, it's on up bar, because the professionals have seen the test on the lower bar, lower time frame, and know there's no supply there, and they've moved back in and moving back up again. But testing always appears initially on the down bar, and that's what you need to realize. That's why I talk about top tails and bottom tails, things like that. Does that make sense? Now we're looking at something. Reader's trying to find something.
Menno's asking, what is the lowest time frame they're looking at? What's the lowest time frame? Menno, who is they when you refer to they? Just waiting for an answer from Menno. I mean, I'm assuming he means professional money, Tom, for the professionals.
But when you've got so-called thousands of smart professional money, they're looking at all time frames. I know they look at minute charts, minute time. They look at everything. And according to what you specialize in, they trade on. Does that make sense? Because weakness, when it appears, will appear on a minute chart. But because it's only a minute, there's not a lot of effort or cause written into that chart to be guaranteed it's going to go a long way.
Eleni, is this the chart that you're asking for? US Steel, is this correct? And also you ask, how's Dallas? Dallas is very well. She's away for a little while now in a part of the country called Wales, where it rains more than anywhere else in the UK. But I think she's having a nice time. So, Eleni, I'm assuming then that this is the chart that you're requesting. So this is United States Steel, I hope anyway. Hope so. Yeah, so shall I put up how many bars? 20, Tom, or what's you two? Yeah. So there was this here, Tom. I'm just, that was our last very volume. Yeah, and then there's a test after a shakeout. This calls this one. So shall I put that up?
Yeah. Well, don't forget, US Steel is a massive company as far as we're concerned. And in other words, there's plenty of liquidity here. And if we look back, back here. Well, there's a down move, obviously. Okay. And then we have signs of strength entering this market after this down move. Don't forget, when you get a down move, you're vulnerable to professional money thinking they can move in there, get a position and make some money. And that's what you're following. And there's signals there showing that somebody's interested. That's lack of supply. That's one thing. And then we've got something else here. This one is a test of that supply. Strength, yeah. Okay. On that, looks gapped up quite vigorously. Right, it went sideways a bit. And lo and behold, there's another test. Now that's more a clear test, look.
No supply.
No supply. That's what tests are looking for. That's exactly what they're looking for. And that's why we tell you what test looks like. It's a red down bar, narrow spread, usually closing in the middle, and the volume is low. So as soon as you see that, right, you know that market's going to go up. Professional money saw that, jumped in and called a gap up, look. A little bit of no demand come in, which is only natural. And I would say that stock looks bullish. There was a bit of supply here, though. Don't forget, you trade in harmony with the index, right? If you think this US steel looks like a decent buy, then you only buy it when the index is showing strength. Right at the moment, it's right at the top of the trend channel. I would say you'd be a bit risky going long in any of these stocks at the moment. But the way the stock market seems to work is you get herd excitement. You get prices. If you look at the weekly or daily chart, you get prices seem to keep going up, 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 right? And you get fed up with that. That's thinking like the herd. You get fed up with those prices. Oh, hell with it, I'm going in. And that creates what they call a buying climax. And when you see a buying climax, it's guaranteed to be the top of that move. And then they will distribute on the back of that, because they need movement to make money. They need to distribute enough to allow the market to fall. We don't know how. If you've got a point figure, you can have quite a good shot at doing a point figure count. I'm sorry, we don't have one. It falls until you see strength coming back in. Then you buy.
I hope that does that answer all your questions, Eleni, because you had a few other questions there. Carlos is saying, Tom, that rule applies. Does that rule apply even if the stock we are interested in doesn't belong to the S&P 500?
Well, yes, because the S&P 500 is a master index, because that's where the equity lies. You've got at least 500 of the greatest stocks in America in there. And therefore the power of the market is built within that index. And most of the indexes are like dogs on leads. You know, in fact, if the S&P 500 goes up, everybody else goes up. If it goes down, everybody else goes down. Now, what was interesting was that I did a newsletter 2 weeks ago, and we looked at the NASDAQ, right? And we looked as if the NASDAQ was actually going to fall, right? But in the pursuing week or so, it hasn't actually fallen, I don't think. It more or less went sideways. And that's because the strength of the S&P 500 was kind of holding it up there. But certainly didn't go up very far. But we do a newsletter tomorrow. We may look into that.
Menno is still on the subject of testing. Do you compare the volume of May 2 with the volume of the test bar of April 17? So there's April 17. There was a test there. There. That's a it was there's no supply. And so do you compare that with that? And then his further question was, or the bar of April 2. This one has the same low. Yeah, that's April 2. So you would be, this is the kind of volume that you do want to see tested, Menno, which, yeah, that's very high. And when it goes, if it goes up and it comes back down and tests that on very low volume, yes. But, you know, when the market, that's right. Tom's saying that's stopping volume here. Once the market is starting to rise and you do see something like a test at a similar level, then yes, you're getting the hang of it now, Menno. Yeah. So do study that webinar. I think, in fact, I think it covers tests in all shapes and sizes, actually. Okay. Peter is asking, how far will this crazy bull market be going? Well, sky's the limit. Do you want us to comment, Tom? Well, we don't really know.
Right, well, it's been marked up and held up, as you say, for a long time. And apparently the reason is that there is a website somewhere that tells you when the Fed are going to pump all this money in. But they don't use millions, they use billions. And they pump this money in. And on the back of that, they mark the market up because that money has to be put into the stock market. It's not pumped into the economy to pay off debts or anything like that. It's there to pump these stocks up, which is a good thing for the US economy. But you will get a high, and your high will be very easy to see. It'll go up one day like it has today, right? And you will see massive volume as the market tries to go up. And now that, if the spreads are not gapped up or narrow spreads, if they're not that, right, if it's gapped up, with a narrow spread into fresh high ground and the volume is massive, then that's more or less a guaranteed top. That's what we call end of a rising market, right? And you can look back in this software and see examples of end of rising market. Apparently gold has one right at the top. Okay. Now, that will mark the end of the up move in the S&P 500. Or the other alternative, it'll be marked up and go up, but it'll be going up on a fairly wide spread, close in the middle. The volume again will be massive, but it won't be gapped up. It may not necessarily be up in new high ground, but that could easily then be what we call a buying climax, and the software should pick that up. The main thing is it's massive volume on the upside. That's supply. And of course a buying climax is caused through people getting fed up, the herd, missing out on these up moves, and they go in and say, oh hell with this, I'm buying, right? And then as the herd, the huge supply that is, hits that market, professional money are selling into their buying. They're selling their holdings. but they bought at lower levels, and that's why they call it buying climax.
Hello, Peter has just arrived. Okay, so Chris, your question on the yen, Japanese yen, do you have a particular time frame, or is it the daily chart you'd like to look at? While you're answering, we've got a couple of questions actually about gold, and I did put this up earlier. I said to Tom, this might be quite a interesting one to point out to people, because to see what Tom has to say about it. Okay, that was the gold GLD that we were looking at. So hang on. Thomas says it looks like it's double bottoming in the same area as April 14 to 16 on much lower volume. What should we look for next? So I was similar, but Tom said something that surprised me.
Oh wait, hang on. Okay, gold. I mean, Gavin likes this, but see, when you see these markets gap down like this, that is weakness. And then after you see these gap down like this, you get what they call an automatic rally. The market is so over sold that it tends to go up. Look, that high volume, is that on the down bar? Yes. Well, yes, well, that's buying. But it's still sign of weakness. These gaps down like this. But gold, I don't normally follow or trade gold, so don't hold me to that too much. But normally it's weakness. Okay, but I know you get an automatic rally after. And then if it comes back down, which it is, look, back to that level, and the volume is clearly low, then if it is bullish, it'll start going up. But when you get these high volume, but the trouble with that high volume, look, excuse me, it's caused through the gap down like this and all the panic selling. But we'll have to follow this. But Gavin loves gold because he's called it accurately many, many times. But there is right at the top of this market, end of a rising market signal, which I was telling you about. Somewhere up here. I mean, there could even be it there.
Which one do you want?
I'm just wondering if this is here.
There's one there. That's no demand.
Oh, is it? I was just thinking of the end of a rising market. It's probably even further back. It'd be a gapped up bar on a narrow spread. Amazing, isn't it? No, that's probably it there, though.
Weakness has appeared, that one. Weakness has appeared.
Oh, yeah. Oh, well. Anyway, I'll let you look and find out. It's there somewhere. Right at the top.
We had a request for this one as well, GC, which is a continuous contract of gold. Do you want me to put bigger time frame up, more bars, or?
Well, it looks like a little bit
Yeah. Tell me when you want me to do the bars.
Yes. Because my eyesight's so bad, I can't see the.
But it's not confirmed.
No, no. But there's your gap down, look. Here. Okay. There's your sign of strength come in. High volume on the red down bar. That's definitely buying. You have an automatic rally, but look how it arches over. They'll definitely want to test this level. Now, I'll just draw a line across there, look, if I can. Now that line there marks where the professional money stepped in. Right, now what we want to see now if you want to be bullish, is the market to fall down, hit this line, and the volume is very low and the spreads are narrow. Then that's going up. But you've got to be careful, because if you see a wide spread down on increase in volume as it rushes towards that line, then that means there could be some built-in weakness, and you might even go even lower. It's as simple as that. Market works on supply and demand. Supply here caused it to fall, right? The demand came in here. On that demand, automatically rallied, look, rolled over, which is a sign of weakness in its own right, this sort of mushroom top we call it. But we know that if it falls back down to that line represents where the professional money stepped in previously here. If it's low volume, low activity, especially if the spreads are narrow, then that's bullish. It's going to go up.
Sebastian is suggesting that wait for the trend to turn up, then look for strong bars to enter on. Sebastian, so yes, if it goes back down there. Oh, hang on, Tom wants to speak.
Well, sounds something like Gavin talking. That's how he trades. I don't really. I like to get in on the action. I don't really. It's not my nature to wait for trends and to appear and all this stuff, to be quite honest. But it's up to your style of trading. When I see weakness or strength, I like to go in and act on it, and that's it. It's not my nature to wait for so-called perfection. Makes it too hard work for me. What's your make cup of coffee, Pete? Yourself.
Cup of tea. 6 chai. Hang on.
No, that's mine. I know you'd like a cup of coffee.
Right. See what comes up here. Hopefully, Chris, this is the chart you want. Sebastian, thank you. Very kindly gave me the code that I need to type in. So hopefully this is, Tom, the daily chart of the Japanese yen. And Chris would like you to comment. So do you want me to put...
I like to have trend lines on it.
Right. Should I put more bars up or...
Let's have a look.
Tom's just perusing the chart for now. Right, so okay, there's 50. Oh, crikey, 70.
In a bear market.
Yeah. Do you want to speak?
Yeah, in a bear. Well, I want you to do it in a bear market. First two highs, first low.
Well,
so where's the high?
Crikey, I mean it goes. Hang on. Right, up here. Is it going to be an up bar or down?
It's got to be on an up bar.
Should we start here? There's one here.
It's not really all that clear, is it?
Not wonderfully clear.
Okay, put 20 bars back up. Right, I never really look at this chart, but all charts are interesting as far as I'm concerned. But we've obviously, I'll tell you what might do. Well, what's the weekly say look like?
Just change that.
See, really, you need to specialize Well, we've got two up thrusts here. There's two up thrusts, definitely. Look, there's one there and one there. This is a weekly chart. And that's interesting. All these charts work the same way, right? We've got an up thrust here, right? Sign of weakness. There's even an arrow on it, look. And then we move along here, and as it goes up here, look, it's gone up on no demand, look. There's the no demand, right? And then, that's why, bang, down it goes. And it's still technically falling. I can't really see where the stopping volume is. This is still trending down. I can't really see where these, if you're thinking of buying this, I wouldn't, because where's the stopping volume?
This bar here, is this, trouble is all your volume's very similar, that's why.
Well, it's a very, very liquid market, and that's really why you should have tick volume if possible. But this is all, doesn't look very strong at all to me. And I certainly wouldn't be interested in buying that to go long. Not at the moment.
Okay, we have a last question for today from Robert. Tom, what principles do you use to set initial stop loss? Hang on, they're having a conversation about coffee at the moment. Can I speak now? Okay. Well, we'll do this question first from Carlos because you were talking about it. Is tick volume better to analyze than regular volume?
Well, if you can get good tick volume, it certainly is. Because tick volume, I mean, we've told you many times in the past that very often these exchanges can be quite crafty. In, for example, the London exchange is notorious for it, holding back volume. They can hold it back for 36 hours, I believe. So, you know, you look at something and you look at it again and the volume's changed. So you've got to be careful, but they can't do that with tick volume. And tick volume is based on movement of the instrument you're looking at. Unfortunately, see, Gavin's in charge of all this development business, and the way his mind works, he seems to miss a lot of it. But tick volume, and I believe eSignal and these companies do produce tick volume, and that's far more reliable because they can't alter it, because tick volume is based on the number of moves that the currency moves during the day. So it's very interesting and extremely accurate. I mean, in the old days when I was testing all this, I'm lucky. I had a tick volume chart, a good one, that was developed by somebody I know. And I had the screen split in two with the tick volume at the top of the chart, and the identical chart underneath was using the oh, excuse me, was the official volume. And I checked that out for months, and believe me, tick volume is good. It's far better if you can get it.
Peter, yes, I take your advice. Best for daily charts to use end of day, because we're using eSignal here in our real time, and there's a problem with data. Okay. Sebastian says, I see something on the 15-minute. Please tell us what that is. Menno, when does the summer start in England? Never. We're still waiting. Is there a official date, Peter? A week ago, our summer apparently started, but we haven't seen any sunshine yet. So, well, we've had a little bit of sunshine, yeah. That's about it. The bar before 1715. Yeah. The bar before 1715. Put All right, put the cursor under that low and then 1745 as a test. So 1740 is that one. Is Tom, Sebastian's saying that's a test of this. Well, actually, yeah, it's coming up with no supply. Yes. Tom saying yes. So that explains the current rise in prices. That's correct. It's gone down there and it's tested that level. Do you want to say something, Tom, there? Right.
Well, it's a fairly obvious test look. You can see that. And the market's responded to it. Now, what's interesting in that test look, previously, when I was looking at his chest, I looked at this, and I said, that looks mysterious. Looks like a shakeout. Now, are they testing this here, this shakeout? It's a similar level, look. So, don't forget the market is devious, it's cunning. It's not there to help you. It's there to trip you up. Believe me. But on saying that, there is definitely weakness everywhere. So if there's a rally here, I wouldn't think it would go very far. But that's interesting, Max. I said at the time, I wonder what the hell they're doing there. Look, that definitely looks like a shakeout. And that definitely is a test. That's a test, look. Remember, it's a down bar, narrow spread, close in the middle, and the volume is clearly lower than the previous two bars. And that's why it's responded up. It doesn't mean to say it's going to the moon. The simple reason is you've got upthrust here, you've got lots of no demand, but you've got this in the background. This is serious stuff here. So this could very well perhaps go up on no demand. But anyway, thank you very much for listening to us. And I hope you've enjoyed it. We always enjoy talking to you. I know Rita and Peter enjoy coming here and helping me. And so I'll say good night to you and thank you very, very much.
Okay, thank you for coming along. And if you had a question that wasn't answered, put it in the forum, and we will be here on Sunday to do the newsletter. It'll be, yeah, we're doing the newsletter Sunday this weekend. So, and we'll check any forum questions as well. So have a lovely weekend, and we'll see you same time, same place next Friday. Bye bye.
Welcome